afternoon and welcome to Stock Market Today. It's Alyssa Corum here with Ken Shreve, and on today's show we're going to be taking a look at the charts of Costco as well as Cintas and Dexcom. Some interesting action there, but first let's take a look at the major indexes. Another strong day for the stock market. We had the Dow and the S&P close up 0.7% apiece, while the Nasdaq leading with an 0.8% gain for the day. I mean, this rally seems quite unstoppable, but is it sustainable?
Well, that's the big question. We were talking about this on IBD Live this morning, that you're starting to see headlines about a stock market that is very overbought, and that leads some to believe that we're ready for a pullback. We are seeing action in one index that's a little bit, gives reason for caution. Another FANG stock that's looking like it might be ready to pull back soon, a big winner. So, the trend is still up. We're starting to see some subtle warning signs that we may be ready for a pullback here, but still overall seeing pretty good action in growth stocks, and a nice day of outperformance for software stocks that helped lift the Nasdaq, like you said, to a day of outperformance, and a good day of outperformance for the IBD 50 as well. All right, well, let's take a look at some individual names and potential buying opportunities. We have Costco gaining 1.6% for the day in above average turnover, gapping up on the release of its same-store sales figure for the month of December, up about 9%. Investors liking the look of those numbers. So Costco retaking a technical level here today. Talk to us about this being an entry point for investors. Well, I think it's an aggressive entry point because of the bullish gap above the 50-day moving average. It is getting a little bit of resistance at this 300, which we would call a round number. So it's still forming a flat base. You've got, I believe, a 307. Help me out here. That's 307.20. 307.20 is a conventional entry on that flat base. But bullish move above the 50-day moving average. Looks like it's going to close in the bottom half of its range, so kind of petered out a little bit, but it held above the 50-day, and like I said, getting a little bit of resistance at the 300 level. All right, and you can only see the last couple of months of action on this particular chart, but it's always good to take a look as well at longer-term charts so you can really get a sense of what the long-term leaders are in the market, and I think Costco would be in that camp. Yeah, no doubt about it, and always good to use weekly charts and daily charts when you're analyzing a stock. Another element of Costco's sales data today was that their digital sales were up very, very nicely, up more than 40%, and that's been a little uneven in recent earnings reports and recent sales figures. So a nice jump in digital sales, like I said, up 40% in December. So that's pretty positive. That is pretty positive and very important as we are in this Amazon age and other retailers chomping at the bit to catch up on that side of the business. But let's take a look at Cintas. Ticker there is CTAS. This stock gaining about 1.5% today, slightly above average turnover, extending its gains after slightly topping a cup with handle buy point in Wednesday's session. Yeah, I mean, this is kind of a steady Eddie stock. It pays a dividend, but when you look at a longer term chart for this stock, you'll see it's up, 450, 500% over the past 6 years or so. So this is just a real steady earnings performer, and it's also given great price performance along the way. So this is yet another breakout buy point here of 274.85, and just a nice breakout. We've seen so many breakouts in recent weeks and recent months, and so many successful tests of the 10-week moving average and bullish 3 weeks type patterns. Seeing a lot of good action in individual stocks, and Cintas is the latest. Yeah, that's right. And one more note on this chart, that relative strength line, that's the blue line you see on the chart. It is off of its all-time highs from earlier in the year, but it is hitting a short-term high above the start of the handle. So that's also something to note with the RS line measuring price performance versus the S&P 500, technical indicator we like to look at. Yeah, definitely. And we're seeing, maybe a few more breakouts lately with lagging relative strength lines. The most powerful breakouts when we see stocks clearing buy points, breaking out of bases, you want to see that relative strength line generally near, new high ground when the stock is breaking out. All right. Well, it looks like that might be the case for Dexcom, yes. Which
much. Let's take a look at that chart, a weekly chart here. That stock up over 9% for the week, it looks like. Quite a strong week for this name, breaking out of yet another base here, Ken. What are your thoughts? And this is in the medical sector, and we've seen quite a few strong names out of that group.
Yeah, specifically diabetes, and there's been some good movement among diabetes stocks, and Dexcom is a provider of continuous glucose monitoring systems for diabetics, and just really love the look of the weekly chart here. You had a powerful breakout several weeks ago, and then a nice orderly pullback right to the 10-week moving average. It eventually formed a little base here and a nice a breakout over a 232.10 buy point. Might look like it's too late to buy, but it's still in the 5% buy zone. So this one still looks actionable and really bullish fundamentals at Dexcom.
Yeah, that's right. And yet another reason to be looking at these weekly charts, because that pattern doesn't show up on the daily chart. But if you take a look at the weekly, get a different perspective on what's going on.
Yeah, really strong stocks with great institutional sponsorship. When they break out of an initial base, you'll see many of them come right down to that 10-week moving average, find support, and they'll either bounce off the line or build a base. I mean, Dexcom really did both.
Yeah.
I mean, the bounce coincided with the completion of a base here. So nice weekly gain taking shape this week, and still looks to be in buy range. You don't want to buy a stock more than 5%, past the buy point.
Very good point. All right, and Ken mentioned IBD Live throughout our broadcast, and if you have not yet checked that out, make sure you do at investors.com/IBD Live. You can get a free 2-week trial, but Ken, tell us a little bit about maybe what we could expect to hear or see even when we tune in to IBD Live.
Well, like I said, we're getting a little cautious on the market here. We're still respecting the uptrend, but starting to see some kind of curious action in one index in particular. So I'm sure they'll be talking about that tomorrow morning. But like I said, every morning at 9:20 a.m. Eastern Time, 10 minutes before the market open, we go on the air and talk about stocks moving in pre-market. And then when the market opens for the next hour or so, we're just talking about actionable setups as they are happening, and just really good information for the investing audience out there.
Yeah, fantastic, can't miss analysis there, so make sure you check that out. And you can also get insights from our weekly podcast, Investing with IBD. We have a new episode that drops every Thursday. You can catch that by visiting investors.com/podcast. And I'm pretty sure we'll also get a tweet or two about it, because Mike Webster was on this week. So to get his take on Tesla, NVIDIA, and more, make sure you check out the podcast. All right, everyone, thanks so much for watching today, and we'll see you right back here tomorrow.